guys, David here. I'm just doing the London session recap today for EU and AU. AU was quite an active morning, which is quite unusual for it, so it's quite a bit to cover on it. But it took 2 trades, 1 win, 1 break even on AU, and so hopefully some nice lessons in it. We'll start with EU. Obviously we're bearish overall. This is the swing high, this is the swing low, so obviously we're expecting price to eventually run this week low. We'd mitigated this supply in the premium in the leg. Say it is the supply that led to this IBOS, so it is a decent zone, and it's very possible that we will roll over the downside from here, particularly when you see that huge bearish engulfing candle. And then obviously we're pausing in this demand. Makes sense, we might get a decent pullback from here. It's the demand that led to the bullish chalk there. You could obviously argue it's a flip zone as well, because it flipped some demand in there. So yeah, coming into the session I was sort of thinking it was possible that we're going to get sort of a bit of a pullback before we sort of continue lower. But the 4 hour, yeah, and this 4 hour POI is nested within the daily, which is obviously massive added confluence. It's an extremely high probability POI in my opinion, because you can see it's where the supply that came in to cause the bullish break, or the demand came in, sorry, to cause the bullish break of structure. It's a flip zone, because you can see we basically caused price to close above that reaction to that wick, and it swept liquidity as well. So it ticks all the boxes, and it mitigated this sort of range as well, so it's less likely the price is going to want to come down and mitigate this sort of refined candle. Had inducement as well there, so that takes all the boxes. So I was thinking it was pretty likely that we were going to get a decent pullback, maybe ideally up to here, or at least maybe up to the EQ of this range. So yeah, I really liked the POI, so I was happy to look for longs. Not really ideal to be selling directly into this, and you're selling in the discount of the 4 hour trend, or 4 hour leg, and counter the 4 hour trend. So preferred sells over buys, but obviously we don't have to pull back. The market can do whatever it wants, so we could have kept tanking, but I was sort of happy enough to sit in the sidelines if that was to happen. So this morning in the M15, you can see this was a swing high, this was a swing low, and this is my strong internal, and this is my weak internal low. So usually whenever we get a huge sell-off like this on the 4 hour, so you can see that was basically caused by the CPI news, this huge sell-off. Usually whenever we get a pullback towards EQ, it's very unlikely that this is going to come down and come straight back up. Usually what happens is you get like a sweep of liquidity, so you sweep that low and then you get it. So we're sitting around here this morning. So a main idea, I was waiting for the M15 chalk anyway, because it makes no sense for me to look on the M1 from this week low, and again it's a week low because it failed to cause an IBOS or a swing boss, so it makes no sense to me to be looking for the M1 from there. It's like we have mitigated the EQ of the supply range at the extreme of the strong internal range, so it made sense we could have tanked from here. Looking in the M1 there makes absolutely no sense to me whatsoever, so I was waiting for an M15 chalk, and I was thinking that ideally we might basically get a sweep of the liquidity behind this low and then get the M15 chalk, and then that would have been basically the start of sort of the 4 hour M15 pullback. But you can see the extreme demand, it'll be mitigated multiple times. It could be mitigated there, sort of the EQ was mitigated there, and then you refine it down to this wick, it was mitigated there, so it'd be mitigated 3 or 4 times, so you couldn't really anticipate that this zone was going to hold at this point. So sort of waiting for a sweep liquidity and a bullish M15 chalk, and eventually got the bullish chalk, but price didn't pull back into my M15 demand. You can see, you can start arguing here that there's like zones in here, but they're only wicks, they didn't sweep liquidity, no real inducement in front of them. I was just happy to wait for something clear to develop, or for price to pull back in here. There was one potential entry that made sense sort of after the M15 chalk that I'll show you now. Basically this was the M15 chalk line here, so you can see we just wicked it, and then basically we pulled back into this demand, which obviously caused the chalk. Not somewhere I would like these do play out, because at the end of the day it's the demand that caused the chalk, but really wasn't a fan of it. Obviously it didn't sweep liquidity, it left basically equal lows behind. You can see it'll be clearer on the 15S if you want to drop down to that. You can see it's pretty clear, equal lows there, and this little range here was unmitigated as well. So it was very possible that this could have been used as inducement for that. So it's not personally somewhere I would leave a limit order, but I can see why you play it out. Again, you got the chalk here. Personally, trading from that demand at the week low without an M15 chalk's way too aggressive for me. It might fit your personality, you might have the data to back it up, but if you took a buy there, I would really strongly consider whether it's worth it over a large sample size, because like at the end of the day we all aspire to manage more capital, whether that's with a prop firm, private fund, whatever, and it's like, do you really want to be taking that trade if you're managing 400k? You know, it's way too aggressive. The strike rate's going to be terrible, and you know, you really need to ask if it's worth it. There's no real continuations around them in here. I was happy enough to just leave it, to be honest, at this point. And yeah, there was this M15 supply, which was pretty crappy zone, to be honest. You can see it didn't sweep liquidity. Yes, it sort of caused price to give us a bearish chalk, but no inducement, didn't sweep liquidity. It was always likely to just be a minor reaction. So again, you have to ask if it's worthwhile looking for the entry model there. And yes, we got the entry model. Got the bearish chalk, flip there, entering the flip, then you can see we just pushed down, barely broke the low, and then just pushed higher. So that's like, the entry model is pretty clean, but again, the M15 POI, the M15 swing structure, internal structure trumps any M1 entry model. So yes, in isolation the entry model is pretty clean, even at the liquidation there, chalk, decent amount of momentum down, but it's just the M15 POI wasn't really worth the risk, to be honest. So now I'll go on to AU. Yeah, so on the daily, obviously we had a decent reaction. It's bearish overall. Obviously this is our swing low, this is our swing high. Had a bullish chalk coming off this extreme demand, but it was very likely that the bullet, if you view it, that's just basically one push down and then there's a pullback. So the bullish chalk was likely only to mitigate something within this demand range or supply range. So there's no massively clear on mitigate zone in it, but you can see we mitigated this sort of wick, which is already mitigated. But again, if you want to drop to the 8 hour, 12 hour, whatever, you probably find something in it. And then you see we pushed up, mitigated zone, and then pushed down into this demand. This demand is valid to look for longs because it caused the chalk. So it's not beyond the realms possibility that we get a bit of a decent pullback, maybe to mitigate something and then continue lower. But ultimately it's bearish. We pull back, we've mitigated this flip zone in the premium, so it's very likely that the low is going to go at this point. So any buys you take from within here, you have to understand they're completely short term and manage them accordingly. So yeah, that's the daily. On the 4 hour again, see, we're actually bullish in the 4 hour. This was the break of structure, so this was a strong swing low and this is a weak swing high. We had a bearish IBOS here after mitigating this super clean POI, like it's right at the extreme, mitigated this sort of range here, inducement in front of it. So no surprise at all that we got the huge reaction from there. And obviously this is your daily range as well, so mitigated the 4 hour within the daily range. Huge amount of momentum on the downside. This POI wasn't the best. Yes, it caused sort of an IBOS there, but didn't sweep liquidity, no inducement in front of it, so it was always likely it was going to get run. You can see we got a bit of a reaction, but trickle down to mitigate the wick, and you see the wick, we had sort of equal lows below it, or in front of it, sorry. So no surprise that we're getting the decent reaction from it. So from here it's possible that we sort of get the pullback up to here, at least to the EQ, maybe even the EQ, this sort of range. But so far the reaction's been pretty corrective, so there's nothing to, you know, like, you compare the pullback to sort of the push down, it's quite clear that the bulls are in control. So any buys you take here, you have to manage them accordingly. Yeah, so I was happy to take buys, but I was aware that this pullback was pretty corrective and huge momentum to the downside, so it wouldn't surprise me if basically we tanked from here without mitigating the EQ. And then the M15 coming into session this morning. I'll use bar replay for this just to clear it up a bit. Yeah, so we were in this sort of demand. I think there was Australian news overnight, so this basically was caused by the news. Now it led to this IBOS, which is very good. We didn't mitigate anything too significant on the M15, so it was plausible that we would continue higher to maybe mitigate this here within the range. So this POI was decent, caused the IBOS, the liquidity POI as a swept liquidity twice there. And yeah, I was happy to look for longs from there in anticipation of target in the weekend turn. The one thing that I wanted to be careful of is if you view this push down, it's quite clear that that's sort of a pullback and then a push down. So I was sort of mindful of this range, that basically price could push in here and then continue lower. But obviously didn't want to be trading directly against that in the M1. There was a nice entry within here. Textbook entry model even gave us a couple of opportunities to get in. So you can see, yeah, we swept the low there very nicely. So that's your liquidation. A key detail here on the M15 as well is that we had pulled back into this sort of bullish candle, which is obviously M15 supply. We had pulled back in, pushed down, but failed to close below the low. So that's again a sign that maybe supply on the M15 is starting to fail and give you more confidence in entering the longs. So yeah, that's obviously the little M15 range there. You can see we mitigated it, pushed down, but failed to close below the low. So you have the mitigation, the liquidation, and then play it on. You've got your chalk, and you've got your V-shape, pretty clear V-shape. Now, ideally, you would have wanted to see this supply fail, because you can see it's containing price, but then you sort of, when you've built the whole story from the higher time frames down, you can be more aggressive here. Play it on, builds a bit of inducement as well, not the best, but it's there, there's a low in front of it, and then yeah, just tagged in and ran pretty nicely. There was another potential entry here, which obviously it's on the wicks, which again isn't ideal because it didn't sweep liquidity, but the extreme was mitigated, so it made sense to enter there. We had an M1 boss at this stage as well, and the M1 flip, so this is even higher probability entry, but I wasn't quite at break even at this stage, so I wasn't really interested in this, but again, played out beautifully. See if we hit it. Yeah, and pushed up again. So on the M15 at this stage we have the bullish chalk, which gives us this fresh demand to trade from. So at this point we've mitigated this range, so I'm aware the price can sort of reverse from here and take me out, but sort of trade, I like this POI with this weak internal high to target. It did look like it was just sort of a pullback correction, pullback to push up higher, so I was happy to look for longs in here. There was price pullback into it then. Yeah, pull back in, mitigated this, refined M1 demand within the M15, liquidation, so mitigation, liquidation, V-shape, chalk, perfect. I was happy, no clear flip, so it was entered an extreme there, but there was no tag. And then you can see price sort of trickling up, which again is your sign that maybe the bulls are struggling to push price higher. Fail to take out the high, so once you fail to take out this high in the M1, that low is weak, so at this point I have no real interest in trading from that demand. Come down into it, you can see demand holds, and then we get the chalk. So again, you have the mitigation, the M1 POI, the liquidation, chalk, decent amount of momentum in the V-shape, and then we pull back into the supply and continued higher. But personally, no interest in trading from the weak leg, the weak M1 leg, to be honest, because you can see like that's so V-shaped. Like it's on an awful lot of occasions, price is at least going to sweep that low before it continues higher, so it's pretty low probability to be taking that trade in my opinion, but if it fits your plan, then great. So now at this point, I'm not massively loving the price action at this point. I know there's a decent probability that the week internal high is going to be run. We've had the bullish M15 chalk, but push up was quite corrective. You can see we got the chalk and then we sort of ranged around for a bit, failed to close above the high there, which is obviously not a good positive confluence, and this range was still holding. So at this point I was thinking, not massively loving it. I'm running a decent amount of profit on the initial entry. I've had a quiet few weeks, so I really want to buy something. So question is, you know, do you take profit? Do you take profit early? Do you try and find somewhere within here to basically take profit? Personally, I usually aim for 10 or give or take a couple of or either way. Like I'm not going to hold through a major swing or a major supply in a man zone to try and get 10 or. Like I'll happily take 8 or 9. And equally, if I'm targeting 10 or and it's practically at a week low and or a week high, whatever, and I'll push it to 12 just because there's such a high probability that if it gets to the 10 or that the low is going to go at that point. So that's sort of how my management works. So I was targeting, I think it was just over 10 or to the week internal high, so I didn't really want to cut that short because I knew there was a good chance of it running. So then what I did was look for a hedge within this range. Now this was a pretty beautiful setup. Play it on here. Yeah, you can see this M1 POI ticks all the boxes. Swept liquidity behind the inside bar. It's right at the extreme of the range. Has beautiful inducement in front of it. It's this high, and then we sort of swept this high as well. So when I saw this momentum coming in, I was basically like, you can see clear V shape there. I was like, right, I'm gonna try and get in here. So entered on the extreme as there was no clear flip. You can see you have the liquidation, the mitigation of the M1 at the extreme of the M15 range. Yeah, pretty V-shaped chalk, has all the criteria. Now, had I not been in the buy, I probably wouldn't take this because at the end of the day, everything was still bear. It was, the internal was still bullish. With a bullish M15 chalk. So at this point, the most likely course of action was that the high was going to be run. But yeah, when I saw the V shape, obviously I was still in my buy from down here, so that's not really what you want to see. You want to see the V shape go the other way towards the high. So obviously running a decent amount of ore at this stage. You can see running 8 ore. Yeah, maybe could have taken profit there, but yeah, Lord, I was happy enough to target the week high, given how everyone was looking. And then we got the entry model here. So at this point, I was looking at this M1 POI as this was the last point that had to hold. If this high went, basically it was very likely that this high was going to go, because this was like the range of sort of containing price. So if this went, then it was very likely that basically we're going to run the week high. So I entered here perfectly happily to accept the risk, that knowing that yes, price could come up here and take me out, but if that happens, then it's very likely that this here is going to run the full take profit at the high. And then equally I know that if we get tagged in here and price pushes down, then I get it to break even and basically have the market hedged, and then at that point I don't really care where it goes. So I play it on, ranged around for a bit, and then just tagged me in perfectly, and then absolutely tanked. So I'm obviously taking out for break even here. You can see just how corrective the push up was. Like, it's pretty clear there's tons of liquidity there. If you look at it objectively, you can see it's pretty much just impulse correction. At this point, when we sort of took this high and then immediately started sort of retracing, it was very likely that this low was going to go. So I think it was 8.2 or to the low. Yeah, 8.2 or to the low. Obviously could have pushed it a bit more, maybe down to the M15 demand or whatever for 10 or, but it's counter internal trend. Still sort of, I'm happy enough just to take me percentage there. So that was a pretty clean example of a hedge. It's something that I've been trying to sort of add into my trading, sort of where you can be more strategically, be more aggressive. Now, that doesn't mean just hitting every M1 chalk within here, because obviously you're just going to end up taking a lot of losses. But like, if it's the last point that has to hold, like if this holds, then it's likely this low is going to go, and equally if this fails, then it's likely the high is going to go. So it's a pretty key inflection point in the market. So yeah, pretty nice use of a hedge. Something I've struggled with in the past, because usually when I'm in a buy, I'm completely welded to a long bias. All I want to see is things that support my long bias. So I've been working on trying to stay more neutral, so I'm pretty happy to have caught that. And obviously it would have been pretty annoying to be running 8 or from here and end up taking a break even. So yeah, very happy with that trade. Very happy with both trades. Followed the plan on both of them. Yeah, that was it on AU. 2 very nice trades, and then you can see ultimately on the M15 this range held, and you can see it just looks like pretty much like that there. So yeah, ultimately I think this is still the week internal. Yeah, it's possible this extreme is going to hold and then we'll push higher, but at this point you can see sort of the supply is being respected. So ideally you probably want to see an M15 chalk before looking for buys at this stage, or at least supply to fail. So yeah, that's AU. Pretty busy morning, which is pretty unusual for the pair, but that's what AU's like. I'm sort of the poster boy for trading two pairs in this group, because most people only trade one. And what I always say to people is like, if you have the time, yeah, like if you're full time, whatever, yeah, you can focus on two pairs, no problem. If you're learning and you're starting out and you're still working or whatever, you don't have the time, then two pairs is too much in my opinion. It's just, you'll end up basically becoming a jack of all trades but a master of none. And yeah, look, AU, it's very trying on the patients. It's like there was nothing resembling a setup for maybe 4 weeks there, and you know, you keep watching it, you do your markups every day, etc, and it's quite frustrating. But you know, eventually it does sort of, you do get your couple of trades a month on it. But it's just, it's like if you're inexperienced and your psychology isn't the best either, like it's very easy to sort of, you know, if you don't take a trade on it for 4 weeks, it's very easy to start forcing things because you think it doesn't work. So you just have to be patient and wait for the setups. But yeah, AU, that's AU on a couple of nice trades, and hopefully he's learned something from that, guys. If you have any questions about it, then give me a shout in one of the public channels in Discord and I'll get back to you. Thanks very much. Bye.